Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of XAUUSD gold. Thanks for joining me here. My name is Vic. We're going to go through multi-time frame analysis. We are going to start with higher time frame because we just started a new month, and a lot of things can actually happen in the last month of the year before we go for Christmas holidays and other stuff. And there has been a lot of structure change in gold as well, so it starts to make sense to start from higher time frame. So if you have been following my analysis, you know what I'm going to go through, but this is for the new subscribers. So this is what we have been looking at. So gold, remember, gold has been creating a W pattern here, and this is why from August last year, 2019, 2020, we have been looking for a short from 2070 level. So from approximately that level, we have been maintaining our bearish position all the way down to 1680 level. And from there, we looked for a long position, and then when it came to 1680 level, then we started for long position once again. And since then, I've been personally maintaining my bearish stand on this. So I've been taking several long positions, but my overall bias on gold has been bearish, and it is still bearish for now because until I see few evidence according to my methodology, I will still stay bearish on it. And that was confirmed by last month's candle here, which was very well rejected. And at this point in time, when the market was going upwards, majority of the traders, analysts, and bloggers, they started saying that the gold is starting the new leg. It's going all the way to 2000 and other stuff. I mean, anything is possible, but trade what you see. So there was a possibility that market was going to go down, and I've shared this several times in my posts on Twitter and Telegram and LinkedIn and other places that on weekly time frame this is still bearish, and I'll show you why when we look into the water and research system. Okay, so the market has been bearish, and but if you look at the overall structure here on this higher time frame, which I'm looking at monthly time frame, the market has created this W pattern, and because when the W pattern completes, the market goes down, and the market came down to hit our first target is which is 1680 level here, right? And then market created a double bottom, started to go up. So that obviously gives you a very good level here. Let me actually show you what I mean. This is a very good level for liquidity, right? Because this has created a double bottom. So a lot of people will think that this is a strong support, right? And when people start to form these sort of like mentality, when they have like psychological strong support, strong resistance, markets tend to break them. So what I'm expecting that the market can still come back down at least below 1680 at some point in time, break it, and like maybe at that point in time it can start to go up for some time. However, if this thing is broken, if 1680 is broken, then we are looking for even further downside. And I'll tell you few reasons behind that as well. So right, so one of the reasons is that, let me clean this up. You see, if we are looking at this M pattern, right? And this M pattern, it has taken a little bit of divergence, like from its behavior. But if it actually breaks through this midpoint, then it is expected to fall down to near about this level here, right? Which is going to be 1550 or even little lower than that. Because why? Because the market has done this. That means the market can actually go even lower than 1550 now. But 1550, 1570 level is what we can expect if this mid is broken. That's one reason. Another reason is there is a gap left around 1550, right? 15 something level here. So ultimately, gold is going to go and fill that up. Now, there are few gaps which are available here on the low time frames, and there is a gap around 1882 level which has not been filled. Remember, in the past analysis, I was expecting it to get filled, but that didn't happen, which means that gold ultimately will come down at some point in time and then go back up. It can still go from here where it is right now. So if it goes to 1882, then also it can come back down to complete this entire setup. So how do you read this? You read it in steps. So you do not try to predict the entire market in one go. You try to read it in steps, because following the steps actually gives you a kind of trading plan. So let me show you why I'm expecting that 1550 level or so. If I draw Fibonacci from here, Let me take my Fibonacci tool, and if I draw it from here all the way to this level, why I was looking for support around 1680 is because of 38.2 Fibonacci level right there. This is why it actually fell there. Now the next one is going to be around 1562, and after that we have 1441. Okay, so these are three levels that we are looking for. So let me clean this up and put horizontal lines on these levels. That's 50, and that is 16.8. And then if I draw the same thing from here, I've got 1616 level here. And if I draw same thing from here, I got 78.6 right there. So this becomes kind of FCP zone. And this is where majority of the confluence is right there. Okay. And if I remove this, this becomes my proper M pattern. Right, but this M pattern can only be valid if the midpoint is broken. So, and why I'm thinking why midpoint will be broken is because of this double bottom. When you have this double bottom sort of things, like markets usually go and tend to break them, you have one right there, and there was one here which was broken. Remember 1830 level I told you about, that was kind of triple top, and that was broken. Right, the market went higher, grabbed the liquidity and fell down. Same thing can happen around 1960. Same thing can happen around 1681. So these are very, very important levels in the long run, right? So always take a note of these levels when you are doing any kind of analysis. Okay. Now next is if we go to 12-month time frame. Now you know what's happening on 12-month. Sorry, not even 12-month time frame. Let's go to the 3 months time frame. Where is it? Yeah, on 3 months time frame, this is what has been happening. There was a huge bearish candle, right, which means that market is expected to stay bearish, right? But market went up, created another bearish, another went up, right? So in the next 3 months it can start to fall back down because it's taking what, it's taking alternate turns. So in next 3 months it can start to fall down, and if it actually breaks through that 1680 level, 80 level, 1681 level, then it can fall down to that FCP zone that you have got here, right? There are a few other confluences here which are available to our members only. Now, if I go to the daily time frame, okay, sorry, if I go to the weekly time frame, sorry, if I come to the weekly time frame, this is a very good M pattern which is developing right now. Now, when you have this sort of structure, there are multiple M and W patterns inside one another. So there was one W pattern here which was completed, and that's why I was looking for a short position from here. Personally, I did not take that short position because I was expecting market to go slightly higher to 1882, fill that gap up and fall down. Okay, so I knew it was going to go down, and in the past analysis, I said even if I miss this entire move, if I miss some of it move, I won't regret that because the market could go actually go to 1882 and fall down. It obviously did not do that, so that means 1882 gap is still alive, and at some point in time it can go back up. So this W pattern actually worked out very nicely. Some of our FCP students were able to take it. Some of you were able to take it. I received several messages. There was one guy who made a lot of profit from this move as well. So congratulations to you if you were able to follow this. Okay, personally, I was able to take only minor trades here, not swing trades. There were only few short-term trades here. Okay, now after that, what we have is, let me just clean this up. Now, when you have a W pattern, you will definitely get an M pattern as well. So what we have right now is development of an M pattern here, which means that market can fall down. So with that also shows that this level is important because that's the midpoint. And you see, if you follow this methodology, you will know that where your major support and resistance will be. So near about 1722 will be a very important level, because if that is broken, then we are looking for 1681 level, and 1681 level will be a major level. Why? Because it has been tested once, actually one, two, three, four times, right? Which means that everybody is under the impression that this is a strong support, which means there is a lot of liquidity, and that means that at some point in time the market is going to break through this to grab the liquidity, pretty much like what it did right here. Okay, multiple tops, it went up and immediately started to fall down. So the same thing can happen around 1681 level as well. Now, if I go to the daily time frame, on daily time frame, the price action is actually not looking very nice, and it can be a little confusing. So let me grab this. So it is something like kind of like descending channel sort of thing right now, right? But because of this candle which happened like in the previous session, the market can actually go a little bit higher up, and the reason behind that is this is a weird looking M pattern. Okay, and we don't trade this in our FCP methodology because it doesn't actually conform to our rules, but nonetheless this is actually an M pattern, and that's why the market went up. Now in this process, if you notice, what the market is trying to do is it has created a head and shoulders pattern here. Okay, so this is a kind of like the market is trying to like build that um, structure where it can fall down. But as I said, that 1882 level, right, let me actually change that to 1882. That level, that gap is still alive. So what can happen? There are multiple scenarios. We should always look at both sides, bear and bull sides, so that we know and plan in advance what kind of opportunities we may have. If the market does this, then we can plan this way. If the market does this, like we can execute in the other way. So if the market breaks through this, which is kind of like the neckline of this head and shoulders pattern, then obviously we are looking for a move down into 1722 near about that level. Other, and if that is also broken, then we are looking for 1680. But that if this head and shoulders actually plays out, then it is obviously going to be lower than 1681 level as well. However, the market is right there in this kind of like so as to call neck area or support zone or whatever you want to call it. It's right there, which means that market can push up a little bit. So when the market will open, it can start to go back up slightly more higher. And one of the reasons is that we had is 1800 round number, psychological number. So let me actually put that here as well. So 1800. So I think there is a gap left around 1801. So it can go up there to fill that up. And you can also see that we have a W pattern here. Actually, that may not be the right one. Let me just quickly check that. Uh, Yes, yeah. So there is a W pattern here. So if the market starts to go higher, like if you're trading on a short-term basis, then this can be like your very important level near about 1790 or so. Okay, if the market starts to break through this, then it can start to go higher into 1800 or so, and from there I will look for short positions once again. So at I'll look for short from here. Or I can look for short from there. So this is what we are. Now this becomes a kind of like a game changer zone here, decision zone. So if it has broken, then we are looking for even further short positions. So this is one kind of like way of looking at it. Now let me go to the previous chart that I've been sharing for weeks and weeks. Now remember this W pattern. This W pattern has played out so nicely. When the W pattern completed, the market started to fall down and it gave us all of this profit. This is what I said, like no, I was missing on it because I thought this was going to go to 1882 to fill that gap up. This gap is like, but it fell down, and I was able to take only a few like little positions here, which was fine. Now the market actually got stuck between this FCP zone and this structure zone for some time. It got like it was just going up and down, and in here there were several opportunities. If you know how to trade WNM patterns, there were several opportunities. We were not waiting for any kind of breakouts or anything like that. So we had this W pattern to play with, and after that we also had this W pattern to play with. There was one M pattern here inside of it, there was one M pattern here, and there was a W pattern here. Right, so if you know how to trade these, then there are several opportunities even in the consolidation, and there is a video on the channel which actually shows you how to trade consolidation. So if you have not actually seen that, go and check it out. Now, all of these blue lines are actually the gaps which have been left. right? So there is a gap left around 1801. This is the one I was talking about, and there was a gap around 1769 that has been filled. So market came down to fill that gap up. I believe 1761 gap has not been filled, but we'll have to check again. It may or may not be, but there are two more gaps which are left: 1757, 1753. So ultimately, at some point in time, the market is going to come back down to close those gap up. And we also, remember I told you about this, like, I talked about this particular price action. This is not looking very good. At some point in time, I was expecting price to come back down and clean this up. It did, went up, but it forgot to clean this price action up. So I'm expecting market to come down at some point in time around 1753, 1757, 1761 to clean that up, that price action up. So that's what we can expect from the price action. There are a few gaps here and this price action which needs to be cleaned up. This is what I call as bad behavior. So what we can expect is that market can actually fall down to 1753. If I come to this chart again, 1753 or so, near about this level here. And if that happens, then the neckline will be broken and it will look for even further downside. Okay, now let's look at what I envisage. Okay, by the way, what I envisage is going away after December. So if you want to subscribe, then you should do so as soon as possible. Okay, on what I envisage, we have this red, which means that market is still bearish, and we are looking at monthly time frame. We are looking at monthly. So everything is, this is red, and the market consolidated, but now what, a wave has turned red once again, which means that we are back into the bearish mode. This never actually turned blue. That means that we were in bearish mode anyway. So if we are looking at monthly time frame, don't think that this will start to change almost immediately. It can change anytime, but it may take months. Okay, now if I go to weekly time frame, on weekly time frame we had this red, and the W pattern was completed. This is why we were looking for a short. I didn't take that, as I said, and now the market created this bearish candle here. So right now we are in red here. This water curve is still red. This is red. Everything is looking red. So I will favor my short positions on for the swing trading. And the reason I told you, like, the reason why I've been favoring my short positions is because of this water curve here in the middle. This turned red after months. So if I go back, if you have not seen this before, let me show you this. Okay, when the gold was bullish in 2020, this water curve was blue. It was blue here all time. And around September, no, or actually around March or so, and you will find it in Telegram channel. Around that time, I said this is turning red, and that means I will favor my short positions. When I say favor my short positions, which means that I can take long positions, but I will stay longer with short positions. I will go for extended profit targets with my short positions, because the weekly time frame is still red. That means the market is still bearish. And as you can see, we are turning red once again. Red here, red here. That means we should be looking for short positions more. And if the market starts to go down, then we know that what envisage also gives you guidance profit targets, right? So we will be looking for near about this level here. These white dots are approximate profit targets. Let me actually put a line there so that you know what I'm looking at. So this is 1683, right? Which is very nicely conforming with this support line. And it is also looking for the next level, which is going to be near about 1658, and that is below 1680. And that also kind of like points at, like, if the head and shoulders actually starts to play out. So these are the things that we are looking at in weekly time frame. If I go to the daily time frame, the daily time frame may actually turn bullish if we get a blue here, and the market is already kind of like showing bullish here. This is blue. If we get blue here, then it can start to go up, and I'm expecting it to reach near about this level here. Okay, so let me actually put a line. so that you know what I'm looking at. So near approximately this level here, 1812 maximum, but we also know that the water curve acts as support and resistance. So 1798. So near about 1800 or so, it can reach there on a smaller time frame. So if I go to the 4 hour, 4 hour has already been bullish. So if you see the blue, the market has been going up. Water curve acts as a first target, and the second target will be this one, which is 1798. That confluences nicely. And if I go to even smaller time frames, such as different time frames such as h6, h6 also is pointing towards a target here, which is near about 1802. So on h6 time frame, the market can actually come to near about this water curve, which is again 1798 or 1802. So what we are looking at is that the market can actually um, come into near about this area, which is anywhere between 1802 to 1798. So this is the the level that we can look for as soon as the market opens. If the market is bullish, we can expect market to come into this, and then we can look for short positions from there. If I go to the h3 time frame, that is the profit target level here, the white dot, that is also falling in the same region. And if I go to the 2 hour time frame, that is also pointing to near about 1796. So what I'm expecting is that as soon as the market opens, it can go a little bit bullish. It can go into this 1798 to 1802, and after that it can start to fall down. But remember, we are still favoring the short positions on gold, because the weekly is still bearish. Until I see a structure change on weekly, I will still stay with bearish mode or bearish bias in gold. So hope you enjoyed this analysis. If you found this useful, make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities. And if you want to subscribe to What Envisage, then you can find a link at the bottom of this video. And I'll see you in the next one. Have a great trading week next week. Thank you for watching. Find and follow us on these social media channels.